Good morning, good morning, good morning, everyone. It is Wednesday, December 6th. That means 60 push ups. 60 push ups for all of you in the 250 push up challenge. Okay, so we're going to try and, dissect this a little bit because we've literally been going nowhere and we had a little bit of a warning that went off yesterday. So we're going to go through this nice and slow. Yesterday, the S&P closed down 2.6 from the previous close. I'll show you in a second here. End of the day there, again, going into the spreads without flicking back and forth. I've continued to stick with that 45.70, 45.65 on the SPX because it continues to work. You literally had to wait until 2 minutes before the close yesterday for that break below 45.65. Did not go to zero, but was easily closed well below $1, producing once again a better than 100% return for those letting that $2.50, $3, $3.50 entry come in. You've got it in there today already in the spreads room. The risk trade, 45.70, 45.65. It's getting 3.50 right now. Started talking about this last night, 7 o'clock, 10 o'clock. Those of you with interactive brokers, you can take advantage of these pre-market tradings. We closed red, okay? Closed red on the S&P, which again means that we now have back-to-back red closes. That in and of itself is a small little warning sign because the price action isn't really breaking down. We're not breaking down below support levels, but we have two red closes. Thus, there is a little bit of a warning that we could be due for a green close, which would be above 45.67. And we do have that gap from Friday, 45.94, 45.64, 45.72. That's actually where we've kind of sticking right now pre-market. And I'll get to that in a second. So that right there in and of itself is a warning, together with these 25, 26 point ranges that we're still continuing to get. Yesterday, and literally just highlighting this from a come on, are you serious point of view? Absolutely horrific day on the markets. However, you used your Tesla, your Amazon, your Apple, your Microsoft, Nvidia, Google, your Magnificent Seven. Meta was the only one that didn't play. And you wound up producing yourself with a fractionally red close. So again, sticking with that 45.70, 45.65. A week ago, 29th, that was where that $4 entry came, and that was where we had that dip, on a nice little -1 or breaking the safe edges. We had -1% there on Monday, first time in 25 sessions. The price action is not showing up, and until it shows up, we're going to continue in this stuck pattern that we're in. Futures, nothing is oversold. Nothing is overbought. Yesterday, we did get up into overbought very early in the morning, right around 10, and then we just kind of fizzled around after we had that little dip off of it. Absolutely nothing going on over here that is hollering and screaming, I can't wait for the opening bell to ring. I can't wait for it. And that's why, I've been sharing that wider view, that December 29th, March 15th, June, December of next year, for the bigger, broader, wider view of everything, so that you're not stuck here staring at your screen with these 23, 24, 25 point ranges and trying to actually make something happen. So here with the VIX, okay, 1255, pounding the table. Go out there, get yourself a little bit of distance, a little bit of time, buy yourself some puts. 20-day moving average got nailed yesterday. 1339 did break back down below it. We filled the gap that we had overnight, but we still have this weekend gap heading down here into the mid 12s, respecting that gap. IWM. IWM again looks very, very much as a completed 1, 2, 3, 4. Price can still go up into the 189 until we see a break down below 181, 182. We're subject to sit here and wait for IWM to make the decision. IWM having been the weakest link, now being the last part as they rotate out of the NASDAQ. Yesterday, they began to rotate a little bit out of the Dow, and the rotation has been moving from the two indexes over into the IWM, into the junk. So again, we're stuck here. We're stuck here for now in this 184 area. 187 breaks, we could be reaching up into 189. 181, 182 breaks, we should be looking for that breakdown around 178, down into that 177 gap top, which still has not yet been filled. SPX, I'm looking here at 15 days, which includes the CPI gap, which the NASDAQ has already gone and touched the top of. This 4460, 4459 area, we have obviously avoided it. We have been trading in this 4540, 4570 area for the better part of 2.5 weeks. We have pops, and then we have the fizzles back down, but we're still holding in here. So focusing on this, the 5-day and the 10-day moving averages, when I spoke about wiggling a couple weeks ago, these moving averages have finally been able to catch up. And now what we're seeing is we're seeing breaks down below them, seeing opens below them. Yesterday, we played the 5-day, 10-day ping pong game all day long. So our support, without any denial, is this 45.46, 45.41, with a warning area at that 45.37. That's our bottom. Might as well engrave it into stone. We have our weekend gap, which we would love for it to be filled so that we're not leaving any gaps above. But this is still sitting here. This gap here, 45.78, 45.94. Yes, it can be filled. A break above this, and we know that we're in a completely different country. We're talking French, but we're down in Cuba. It just the language and the culture, they're colliding. We're in a completely wrong place. We're trying to play football on a baseball field, okay? We need price action to resolve that. We have our jobs report that comes out today, which is the private jobs. We have absolutely nothing on the table for today after that. The fake non-farm payroll, which is the primary focus, is out on Friday prior to the open, and that will resolve all of these questions as to whether we are getting a sixth green week, which we've never ever had since prior to COVID, and we only had that one, which was, 7 weeks? And it was a rally compared to what we have here, which was a 219-point week, which we knew already was going to be an aggressive bounce. Then we went into a 51-point move, 107, which was the big one during OPEX week. And the last 2 weeks have been 47 points and 39 points. So it is very, very clear that it is starting to dwindle away. It is starting to lose its value. But more importantly, than what I want you to just pay attention to is your moving averages are starting to converge together. 20-day moving average was at 45.05. Today, this will be up around that 45.13 area. They're starting to converge together, and that is when you start to get what you're getting over here on the QQQ. The 10-day and the 5-day have already inversed. 10-day is above the 5-day. The 20-day is starting to move up, and the 20-day has already been tagged and dipped below. So you are starting that process to moving all of your wiggling of your moving averages, like you see over in NVIDIA. You can see it on Meta. You can see it on a number of these individual names where you're starting to turn the corner and starting to get that moving average sell signal. Price still needs to be the first primary indicator to make the committed move so that all of this can start to take place. Nice downward move here, 10-point drop, 394, right on down there to that 383, 384 area on the QQQ. We need that break. We need that break and that breakdown below it and lower and closing in this low 380, high 370 area to really start to sit back, sip on a pina colada, put your feet up on the fire, go swim in the ocean if you live by the beach, and really start to prepare to take advantage of the positioning that you've already gotten advantage of because of this low VIX with the time amount that you're able to take. CPI top right over here, 382.66, exactly where we came down to. Couldn't write it, script it better. Literally touch the top of the gap to the penny, and then we had our bounce off of that on Monday. So we have our gaps from earlier back on the weekend, which are unfilled. Again, over here on SPY, very clear, 453. We come out here on a 10-day even. See it even more clear how we're right there holding this 454, riding right in there at that 457, 456 area. We have this gap that's left over here from the weekend. We're just inside of it today. We're not oversold. We're not overbought. However, when you do come over and you look at your big daddy, that being the NASDAQ, a very slight rollover attempt taking place over on the NASDAQ, and a very clear sell divergence that's in place here. One very good thing that took place, and I apologize for how I need to do this, but that's what I got to do because it just helps me to help you. And that is, where are we? That one needs to pull over a little bit more. So here, the NDX. This is our 4-hour chart, and I'll zoom out if I can. Oh, I can't, so I'll go to a 30-day. This is our NDX and our 4-hour time frame. And as you can see, as we came down here on Thursday of last week and yesterday over here on Monday, we were really starting to get almost to a level where we were going to have to start warning that we were oversold. Thankfully, we didn't have to because we got a little bit of a relief bounce yesterday. So everything is prepared, everything's repaired. There's absolutely no damage that's out there. And at the same time, because we are subjected to price more than any indicator that's out there, we're stuck and we're waiting because we are in this zone that needs to be broken. And until it is, we are stuck with 45.40, 45.75, 45.70, 45.40. Actually, you could call it 45.70, 45.45. Because your dips below 45.45 are very short-lived and your pops above 45.70 are even shorter, other than your Friday algo end of the month that took place, or beginning of the month that we had just happened there on Friday. So take it very light, take it very non-aggressive on your shorter time frame, 0 DTE stuff, and for every clear and intent purpose, safe trades up in this 4,600 area continue to work. I am personally sticking with those 45.70, 45.65s because they continue to pay. Have a great morning. I'll see you guys tomorrow.